Welcome to your weekly market update where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in it. First off, pending home sales, which measures signed contracts on existing homes, rose 0.3% in June, which was stronger than the estimates of a 0.5% drop. This was the first increase that we've seen since February and shows a lot of strength in housing, considering rates were around 7% and inventory was down 14% year over year. Sales are still down 16% year over year, which lines up closely with the decline in inventory and is not due to the lack of demand, but a lack of supply. Additionally, new listings are down 26% from last year, which is not helping the inventory picture. Now, as for mortgage performance, CoreLogic released their loan performance insight for May, showing the strength of the mortgage performance. 30 days or more delinquents decreased from 2.8% to 2.6%. 90 days or more delinquents decreased from 1.3% to 1%, and loans in foreclosure were unchanged near a multi-decade low of 0.3%. For all the talks of housing being unhealthy, overall delinquency is now at a record low, as well as seriously delinquencies. For perspective, total delinquencies were more than 6 times higher during the housing crash. Loans have never performed better. Zillow reported through June home values have increased 4.8% this year. What that means is that over the course of a full year for 2023, home values are on pace for almost a 10% appreciation. CoreLogic is forecasting a 7% appreciation for the full year of 2023. And even more important, Zillow forecasts home values will rise 6.3% over the next 12 months from June 2023 to June of 2024. They also predict that 48 of the nation's 200 largest markets will see an increase of 7% or greater. Now, as for mortgage and inflation, last week the Federal Reserve increased the Fed fund rate by 0.25% as expected. This is the highest that we've seen in over 2 decades. They are showing signs that they could pause in September, in the September meeting. The Fed's favorite measure of inflation, personal expenditure or PCE, showed that inflation rose 0.2% in June, which was in line with estimates. And year over year, the index decreased from 3.8% to 3%, which was also in line with what was expected. It's a big improvement from the peak of 7% last year. The July 2023 Senior Loan Officer Opinion Survey shows that there are tightening lending standards and weaker demand for loans. Okay, so it's getting tougher to get loans out there right now, and the MBA released their mortgage application data for last week, showing that purchases fell by 3% last week and are down 26% year over year, and interest rates were little changed at 6.9% on average. It's better than them going up over 7% again. Now, last thing I want to talk about is we have some great first-time home buyer programs. For IDA, their opening door program reopened. So the benefit of this program, if you have a 640 credit score, if you make less than $132,000 per year of a household income, and that mean household is going to be on that loan, and then if you're purchasing a property at $581,000 or less, then you may qualify for this program. And the best thing about this program is the rates are much lower than the market, about 0.5% or so lower. So call me if you have any questions, mortgage, real estate related. I know it's a lot of information, and I look forward to speaking to you soon. Bye.